Good morning, it's Harvey Jackson. Just going to get through some of the news items. China and Canada and US are all playing, trying to position here, with China and Canada putting out a EV change in stance, and Carney kind of speaking out against U.S. President Trump last week in Davos. He's not making the relationship any better, that's for sure. And yet you get the liberal media, they're talking about how it's good that he's pushing back. Well, yeah, push back, but at the same time you need to realize that, 75% of our trade is with the U.S., and to diversify that, it's going to have a lot of pain for Canada, of course, and Trump realizes that as well. So if Canada makes a deal with China, it will immediately hit with 100% tariff against the Canadian goods and products coming into the USA. Carney urged Canadians to buy domestic products, but did not directly mention Trump's tariff. Our economy is under threat from abroad. Canada have made a choice to focus on what we can control. We can't control what other nations do, and we're going to be our own best customer. But when you're 75% U.S. and only like 5% China or something like that, it's not even that big. You're maybe pissing off the wrong guy here. If Governor Carney thinks he is going to make Canada a drop-off port for China to send goods and products into the United States, he's sorely mistaken. You'll see some of these other things here. I've got a couple of recordings that I'm going to play here. So this policy and the stance change has really made some of the precious metals rocket up there, but there's also some of the both Canada and US are going to have a rate announcement, but neither one of them are going to have any rate change as far as I can see. Here's a discussion about the tariffs.
Prime Minister Carney went to China, came back, dropped some industry-specific tariffs on Chinese goods, and we have a highly integrated market with Canada, sometimes in autos, which he dropped the EV tariff, I believe, from 100% to 6%. Goods can cross the border during the manufacturing process 6 times, and we can't let Canada become an opening that the Chinese pour their cheap goods into the U.S. We have a USMCA agreement, but based on that, which is going to be renegotiated this summer, and I'm not sure what Prime Minister Carney is doing here, other than trying to virtue signal to his globalist friends at Davos. I don't think he's doing the best job for the Canadian people.
CEO of the Canadian Vehicle Manufacturers Association. Canada's auto industry is under enormous pressure, with over 90% of Canadian production destined for the United States. There is no industry without U.S. access and North American integration. Diversification is not an option for automotive, as markets in Europe and Asia are better served by assembly plants in those regions. Canada's market alone is too small to justify large-scale manufacturing. The future of Canada's auto industry and the hundreds of thousands of jobs that it supports depends on securing our trade relationship with the United States. The federal government's decision to open the Canadian market to Chinese EVs is deeply concerning. The Canada-China strategic partnership has the potential to undermine Canada's auto sector and presents risk to the future of our integrated North American automotive supply chain. As the Premier has outlined, it is critical that the federal government rectifies this situation by taking immediate action to bolster the competitiveness of the very companies that have been building cars and employing Canadians for over 100 years. Step one is repealing the costly and redundant EV sales mandate. Under the new Canada-China Strategic Partnership, Chinese manufacturers that do not build cars in Canada or employ Canadians will receive up to $980 million per year in compliance credits. These compliance credits will be paid for by the very companies that operate here, taking money that could be reinvested in Canada, in Ontario, and sending it to China. Step two is taking action to make Canada more competitive for auto. We must urgently lower the cost of investing in plants, machinery, and R&D to give Canada an edge over other jurisdictions. The future of Canada's auto industry hangs in the balance. The actions that we take now will determine whether or not we have an industry for 100 more years.
Wheat hits a near 6-week high. When you look at the charts, it sure doesn't look like a big high here, but Chicago maybe rallying a little bit more than Minneapolis, which is the one that looks like it's only getting into the middle of the range. But here's your gold takes off. It also talks about silver taking off, and some of the the Fed talks and the pressure that's on Powell there as well. So here's our crush capacity utilization is sitting at 89.9%. To date, it's 5.8 million metric tons crushed, and we are still 1.2 million metric tons behind on crush or on exports as well. So just keep note of that. We're way behind. The energy markets are just going kind of a little crazy here, but we'll have a look at that as well. This is the weather just in the that accumulated moisture. And this is your temperatures. Basically, the biggest problem there is just cold, and you can see there we are, the cold. This is just a snapshot of the 2-week forecast now, but we're out to February 5th, and what's starting to concern people is Argentina, not so much the Brazil side now. It looks like the moisture has maybe withstood, but the thing you do have to notice or take note of is Argentina isn't near the size of market that the Brazilian market is as well. Markets, so just have a look at the markets here. Canola is down $3.90. Rapeseed is down or up $1. Your soybean oil is up 0.19 at 54.18. Crude oil is at 61.14. Soybeans up 4 3/4 at $10.72. Spring wheat is up at 1 3/4 pennies at 5.76. Hard red winter at 5.42. And your corn is just slightly down, and the Canadian dollar is up again. Here we are. So this is just a percentage since the beginning of the year. So we're up 7.25% on canola. So that's a pretty decent increase in over this time frame for sure. And this is what it looks like here on the daily chart a little bit farther out. You can see that you're respecting the 23.6 retracement value and even the 200-day EMA. It seems like you get to it, you trade into it, and it's having some sort of resistance, overhead resistance there. But we'll have to see if it can continue. And then your 200-day simple moving average will be the next level. November contract, same kind of idea. This 23.6 retracement value is the support area. Same thing with oil. So you got your soybean oil. It's in that same range. If it does, keep on going, that would be a good thing for canola, of course, as well. Here's your soybean futures, and same timeline, but you sure can get the seed to actually kind of get moving here. It has had some strength, but man, oh man, it sure doesn't feel like it. Palm oil, nice strength here too. That's basically following the soybean oil for sure. And you've got some strength happening in crude oil at the same time too. With I'm going to say, you got the Venezuela situation, and I think there's whatever. Lots of energy increases in the last week or so because of the crazy weather. Here's your diesel fuel futures are basically taking off here as well. And then you got natural gas. It's just going kind of ballistic here at the moment. The Canadian dollars following some of that same kind of move. Getting some good length here. As Trump gets putting the rhetoric out there, then everybody's going to get tariffed again. So here we are. Their dollar's falling apart, and he kind of wants it that way. Gold futures making brand new highs, touched 5,100. Silver making new highs at 110. Copper's not quite that high. So a quick look at the wheat. So here's your spring wheat, just basically getting in the middle of the range. Your Kansas wheat is for sure trying to break out here as well, but and that's that cold weather that's given us that little bit of a pop. Your Chicago, same thing. And your corn futures does feel like we're getting some lift here, but with that USDA report that had that long red candle going down, it doesn't feel like we've got a whole lot there to offer. Next report that we have to pay attention to is the February 6th, the stocks report that's coming from Canada.